into the luck. And so I think being lucky actually means that they're probably doing some of the things right. And so that's the last variable you may want to capture. So not only I think it's a career management issue, it is also helpful when we invest. So when we invest in a company, we often ask, would I pick this CEO to be my partner? If I'm to pick, will I work for this person, right? And in other words, we're trying to put ourselves in the position to judge whether, in our mind, this is a great leader or not. So talking about picking investment, I want to go to the last point I want to talk about today, which is investing in great people. But before I talk about people again, I want to take a quick break and talk about our investment thesis, because I suspect a lot of you come here to hear about how we invest, what are the investment thesis, and then you get like 20 minutes about the touchy-feely issues about people. So we definitely have a thesis. Tsingyuan Ventures, we just invested 60 companies in the last 3 years, and so our investment thesis is based on our belief of the world of innovation. There are 3 points sort of mapped to the 3 thesis building blocks I listed here. First is that we believe in technology, whether it's AIs or software or new materials or biotech. We believe technology is having a more profound impact in all aspects of our lives. And secondly, we believe that technical innovation has become more and more cross-disciplinary and across many different domains. And the evaluation of these technical innovation become more and more challenging. And thirdly, we believe that our world is increasingly globalized, despite our recent setbacks in many major countries. So because of these beliefs, we build a detailed technical thesis to invest in very early technical teams. We also leverage our network, which is our partners, our venture partners, our staff, as well as some of our very technical co-founders, to look for cross-disciplinary disruptive technology and technical innovation, and to help us to evaluate these areas and help us to evaluate those technical theses. And thirdly, we try to leverage the talent and the technology and the markets globalization brings to us. So back to the people factor. Where's the people factor, right? So I'm going to talk about this. Give you the next page. So I'm going to prove it in a counter example way, in that, as you know, success is quite random, or at least that's my belief. I give you one example, but there are many others. The company Slack, right? Stuart Butterfield. It's his second successful company. The previous one is Flickr. And so obviously both companies are very successful. Slack is even more successful than the previous one. But in both cases, he tried to build a game company and the game failed. But the tools he used to build this gaming company becomes so popular. The first turned into Flickr and the second turned into Slack. So there are many examples I can show you that success is random. If you meet a VC, whether they're very famous or very lucky or very good, if they tell you that they know the company that succeeded, they know in the first sight when they saw this team and when they saw the company, they're 100% lying, right? There is no sure bet in investment, especially in venture investment in early stage or in any stages, to be honest. So I like some of the honest investors saying that great companies go through multiple pivots. And even the successful ones went through maybe 4 or 5 different pivots and changed their management multiple times. And so the other way to look at it is that to study the successful companies, you should study the failed companies. So we have more experience with failed company and with successful company because early stage venture capital investment is such a game that more companies fail than the company becomes super successful like Zoom. For every Zoom, there's a dozen of blue jeans behind it, or even other company. Blue Jean is somewhat successful already. So in our experience, in my own experience, most companies fail because of people failure. And so all in all, if you take into these points, if you agree with my logic, that means that when we are investing, we end up investing the people, not the idea or the technology. And so some of the venture investors actually disagree on this point when they say, well, based on the data, actually timing is the most important factor. Or maybe breakthrough technology is also important, or the prior experience of the people is also a strong factor, so on and so forth, where they graduated, blah, blah, blah. So all these things are probably statistically correct, but I believe that timing or technology or pedigree, these things most likely contribute to how big the success is. But having the right people is the most important factor, in my experience, that whether you're going to be successful in the first place, right? So to me, that is more important to be successful than how big the success end up being. And so in my last a number of years of venture investment, what I try to do is working with my team to build a great portfolio of companies. In our last fund, in our current fund, we have 60 companies. And to me, we're trying to build a portfolio of great people. We love every one of the companies. We believe all of them have a chance to be super successful. But in the end, it's the people that we care about. And this is how we work with them to help them be successful, to help them to connect with each other, to help them hire better. We invested in a recruiting platform that we made it free for our portfolio companies. And then we built a network of investors, and that many of them are later stage than us, that high quality investors that we can help our company to fundraise. And we try to stay close to them, stay on their board, be their advisor to help them along the way, but get out of their way, not be a block, not be an obstacle, as much as we can. So there are a lot of those details that we do for our portfolio companies, for our founders, because we truly believe that this is, and there's data evidence to back it up, our most important assets. So I want to take a pause here. This is my quick take on what I learned, and but I'm sure that there's a lot of questions. I see a couple of them pop up in the QA channel already. This is a screenshot, my last page of our some of the logos of our investment. You can go to our website and see more of these logos, and more importantly, if you're interested in the type of company we invest in and how we invest and why we invest them, there are 2 places to follow us. One is on LinkedIn. It's LinkedIn Tsingyuan Ventures. The link is top, but you just search Tsingyuan Ventures on LinkedIn. And if you follow us there, you get to see your news feed, all our portfolio companies news, and they do a lot of wonderful things. And occasionally we also post something interesting and fun there. And so that's a great place to follow us. And we also occasionally publish longer form articles on Medium. So if you go to medium.com, Tsingyuan Ventures, follow us there. Sometimes I share some personal stories Sometimes, we share some company stories there. There's a longer form write-ups. And so these are two places to follow us. So I'm going to pause here. I'd like to have some, interactive questions and answers. Yifu.
All right. So thank you, Xuhui. Thank you very much. Very fruitful sharing. So not only as a role of an investor, but also as a mentor to those professionals who is working for the tech companies. So we will now move on to the Q&A session. We will have about, let's say 25 minutes for Q&A. If any audience would like to raise questions for Xuhui, feel free to use the Q&A button down here on Zoom. So I will ask the first one. So you mentioned 3 points. So first one is to be a specialist and not a generalist. So I'm just curious. So as an entrepreneur, especially as a successful entrepreneur like CEO, and it actually requires broader skill sets, not only one skill set can work at all. So as an investor, so what do you see? What kind of characters do you see in those entrepreneurs? Like, what's the prerequisite for you to invest?
Yeah, so it's really a great question. And as I said in the very beginning, what I said is could be seen as a controversial point because not everyone agree with me. A lot of MBAs already are disagreeing with me, including my good friends, because there is a lot of value to be a generalist. There are super successful people who are generalists, right? Including CEOs, including great investors. And so this is definitely not a one size fits all. But I think because the way we bias ourselves, we're looking at early stage technology companies, we tend to bias towards specialists. The other way to look at it is that idea is not worthwhile unless you really execute it well, unless you really build it out in a world-class fashion. And to do that, we really need specialists, right? So there are wonderful people that are passionate about their topic, and they also have some superhuman skill in certain areas. It doesn't have to be a technical area. It could be a leadership area. Could be an area that you just know something much more. You design really well, right? There are a lot of surprisingly large number of softwares designed poorly and therefore miss the mark, right? So I think, back to your core question about what we look for, that's a really hard question because it took me the last 3 years to come to this point to say, yeah, maybe people would turn out to be the most important one because we always want to talk about technology, talk about product, talk about market, talk about competitor. We talk about a lot of these things and we collect a lot of data. But all the while, when we're talking to entrepreneurs, we're actually, the hidden part of our brain is assessing this person, is assessing this team, right? We're trying to do a lot of pattern recognition because each one of us, like me, I've managed, dozens of teams from 0 to hundreds of people. And so I've seen a lot of different background of technologists, product managers, designers, marketers, leaders, followers, managers, and CEOs and sales, right? So I'm constantly doing those pattern matching in the back of my mind. So that's why I sort of try to distill into 1 or 2 questions that would I work for this person, right? And would he be a successful leader? And sometimes that's how we evaluate them.
Great. Yeah. Thank you, Xuhui. So now we're moving to the questions raised by the audience. So we'll go through them one by one. This first one is actually regarding your virtual background.
So hopefully I don't have a lot of words on my background. If you couldn't see everything, hopefully I cover those points. And there's not a lot of slides. So if you miss a particular one, I'm happy to rebroadcast that one for you. The second one is the T. Galen Davis, and I agree with you wholeheartedly. I also heard about the T and try to be a T with both breadth and depth. I think because the breadth is often easier part because we live in such an information-rich society, and back then you need to literally pick up a book to read it, and now Wikipedia, Google search, and maybe Facebook tell you a lot of things, at your fingertips, and so I can basically cram a lot of knowledge in a hour before the pitch, the meeting to be a passable generalist, right? But to be a specialist is maybe the harder part. That's why over index on that one. But great point. Yeah. Yeah. And also, the next one I think is.
Xuhui, do you want me to repeat the question? Because some audience are dialing in. They might not be able to see.
Oh, okay. I'm happy to do that. So the next one is Zhishong. Does becoming a manager compromise being a specialist?
Yeah.
That's a great point. My own experience is the following, right? I started out as a data scientist. Back then, it's just called scientist, but we're doing machine learning scientist. And then after a few years, I figured like, being a manager is not that hard. Maybe I can be a manager. But as you become the first line manager, as I became the first line manager, I'm still a coach player. I still do a lot of these technical things myself because as a first line manager, you're definitely still a tech lead. There are a lot of companies actually have the position called tech lead manager. And so when you still start to manage small number of like-minded technologists, you're still a specialist. What I'm saying is that from that point on, you have multiple tracks to choose. You could continue to develop your specialty. You could be a Turing Award winner and still an engineer, right? There's a Microsoft engineer for 30 years, and he won the Turing Award, and he's just an engineer. He's not even like a director or VP, right? So I think this country, this economy rewards people who have special skills. Or you can choose to become a generalist, become a manager, leader, executive. That's also a very good path to go. But your specialty at that time will carry forward, becomes part of your experience. So the next one is about coming up breakthrough technology in your opinion. What are the coming up or upcoming breakthrough technology in your opinion? Well, if I'm so good at predicting the upcoming breakthrough technology, I probably shouldn't be here talking to you guys. I'll probably try to buy the stock or do whatever. Just kidding. I think I can only point to the general direction of what I'm excited about because I used to specialize in machine learning and AI, so I'm still very passionate. I'm no longer an expert, no longer a specialist. I'm very passionate about AI. I think there's a lot of breakthrough algorithm in the last few years, but in terms of commercialization, it's still lag far behind. So from the investor standpoint, I think the next 3+ years will be a great boon for commercializing AI technology, and US and China are probably the two countries will benefit the most from there. But there are a lot of other breakthrough technologies I'm really excited about. In terms of AI, there's definitely computer vision, robotics, autonomous driving cars, and the productivity tools can help us to become all very productive. Like I blogged about Otter, for example. Otter is the designated transcription engine for Zoom, and their vision is not just transcription. They're going to organize your meetings, and just imagine how much time we spend in meetings. If our meeting can be even 20% more productive, that's a huge gain, right, across the entire professional landscape. And then in biotech, right? So I'm on the board of a couple of biotech companies, and they're building some really fantastic, medical imaging, DNA sequencing technology. Especially in the current health crisis, wouldn't it be great for us to have or immediately accessible, cheap, fast DNA sequencing technology can sequence the viruses, sequence our bacteria, sequencing our own, samples, and on a daily basis, and tell us what should we do, what should we eat, and how do we become healthier, right? So definitely a lot of areas. Happy to expand if we get the opportunity. How do you try to build teams out of specialists? Absolutely, right? Not only we try to do that, every successful company have demonstrated they're doing that. If you go walk into Google campus, if you walk into even colleges, walk into Stanford campus or Harvard campus, you don't see like 300 or 2,000 journalists. You see like 300 or 2,000 specialists, right? They're all wonderfully special in their own ways. And then putting together, they become a well-rounded class of students or class of freshman employees. All right, so next one, I'm curious to see what I think where big data can go post-COVID-19 in areas of healthcare, food supply chains, and remote working. Very cool. Big data is my passion for my entire career. So I have the privilege to talk to some of the health tech companies in recent days. They're in high demand. I think healthcare is such a large industry, heavily regulated, so it's always very difficult to break into, right? So that's always the head scratcher. Right? We have so many talented software engineers in Silicon Valley and elsewhere. Why couldn't we improve our healthcare technology in a more rapid pace? And big data is one example. I think you just need to take a lot of care, right? For example, how do you collect the data? What is the best way to collect data efficiently? So there are companies building wonderful tools using a lot of clinical knowledge to collect data more efficiently, precisely, more accurately. We're involved in some of those companies. And there are also companies try to protect the data because even though we know the data is very powerful, but sharing it could also have negative consequences, right? People will freak out when they heard some big companies get access to the details of electronic medical records. So there are companies working on how to secure that, how to do anonymous, data mining or machine learning, things like that. There are many ways to solve the problem, but I believe that this crisis prompted us to say, hey, there are countries doing a better job of tracking using big data, and this is probably what we need. We just need to take care of privacy and regulation. Yeah. Elaborate more on how you build tech thesis. What are the emerging trends you see disruptive opportunities at scale? Yeah, so it's hard to really have a one breath answer, but it's pattern matching, right? There are areas that we're passionate about, but more importantly, there are areas we're familiar about. Each of us are specialists. I specialize in enterprise software, AI, machine learning. And there are other partners specializing in biotech or new material science. And so we often look for what are the most exciting innovation that meet the biggest pain point in our industry. And then we say, oh, that makes sense to me. And then you look at whether this team have the right idea and the right people to solve it. And can we help them, right? So it's kind of like a multi-pronged approach. Sorry, I couldn't elaborate more. Andrew said that, thanks for sharing. What is your opinion on college student entrepreneurship? Do you personally like dealing with really, really young, I paraphrase, really young entrepreneurs? Absolutely. So we have like a dual model or two peak investment, in our portfolio. One end are the fresh grad. The other end is the people like closer to my age, like the 40-year-olds, late 30s or early 40s, right? And I'm in my late 40s, by the way. So there are still many of them are younger than me, but I think these two clusters tend to work out well. The second cluster, the ones closer to me, are the ones that have built a lot of work experience and probably serial entrepreneurs, or they come out of big companies and trying to take their ideas to the next level. And so especially for B2B, because that's what we focus on, these kind of relevant experience proven to be valuable, right? The first cluster is the fresh grad. Because we focus on very technical thesis, we tend to look for fresh grad PhDs, or at least a graduate student. Fresh grad, undergrad, it's because the university in this country, right? American university system is built around building like a very solid theoretical foundation in their undergrad, it's very hard to also accumulate a lot of practical experience and things like that. So tend not to work in our favor in that, but fresh PhDs definitely, we have lots of them in our portfolio. Okay, so the next one, how does coronavirus and inverse global impact your business? Depends on globalization. Thanks. Well, I think some of the previous sessions Yifu has organized talk a lot about COVID-19 already, so I would refer you to that. And I didn't say that we're really dependent on globalization. It is just something that we feel it is a big multi-year trend. Remember, venture investment is a very long horizon investment. Our horizon is at least 10 years, right? That means we want to hold on to this company for 10 plus years, right? And so at least for the first 5 years, we don't even want them to exit, right? Only from year 7, we start to think, oh, maybe they could exit. And then the biggest exit, in our prior fund, many of the same people got involved, like Zoom is a great example. It took like 9 years, right? And so I think the current crisis should be and is going to be short-lived. So I don't think it will be affecting our current, in terms of our horizon, it's very short. Hopefully, it's very short. Yeah. Okay.
Sorry, Xuhui.
Yeah.
Just want to follow up on that question. So previous episode, we have covered sufficient content regarding the COVID-19's impact from in terms of the role of the investors and also in terms of the role of the startups. So if you are interested in that part, we get the recap email, and feel free to shoot me an email so that I can forward the email back to you. All right.
Yeah. Elaborate on the opportunity in the online education space. Even though I know a lot of people in online education, I am not an expert in that. I think it's a wonderful time to really look at online education. I know a lot of professor friends, and many of the alumni are professors in great universities in America, and for example, University of Maryland, they're a big Cisco shop. They have 30,000 seats on WebEx. And when the crisis broke, they sent all the students home. And within the first week, they bought 30,000 seats of Zoom because WebEx doesn't work for this, right? So every tool has underwent a lot of stress testing. Some failed, some succeeded. So I think obviously it's a wonderful time for Zoom to potentially become a great company, like good to great. They're also under a lot of scrutiny. I think it's still under a lot of competition. I think it's great. I hope tools like that can continue to flourish and help the online education. So there's definitely a lot of opportunity along that way. I'm not an expert on that, but best of luck. Okay, the next one is Gina Liu. What are the different qualities required for great executives versus great investors? What suggestion would you give to people who want to become investors? First of all, like I said, investing is probably the last stop of your professional career. So unless you're absolutely sure, there's no going back, right? Second of all, to me, I think startup experience is absolutely critical. Like, you need to build one to know one, right? And the other things are just whatever makes you a great person that can potentially, weave into your investment thesis. There's no true investor or successful investor. You can't really copy the investment thesis of other firms or other people. You have to carve your own way. It's a complex question. I'm still searching for it. So unfortunately, it's one of those things that's hard and it doesn't really give you a lot of data points because you invest in, like what we did, 60 companies last 3 years. Most of them will take years to find out whether we're right or wrong. Okay, the next one. like to listen to your thoughts on how COVID-19 will affect VC industry in the short, long term. How does your fund navigate through this period of time? I think, again, you know, like Yifu said, many of the other speakers before have covered this. My answer is very similar probably to most of the investors. Short term, there is pain. We're helping. We have multiple workshops to help our companies to apply for PPP loans, to advise them on tightening the budget and cutting their own salary, you know, especially the senior folks, and to lengthen the runway. And then in other cases, we're helping to fundraise. In yet other cases, we're injecting additional capital into the company to help them to weather the storm. So we're doing all of the above and then some. Okay, Tyler says, CFIUS effect on your work, both in the past 1 or 2 years, how you see your influence in the future. So I don't want to touch too much on the politics. You know, CFIUS came out, some of the new rules, FIRMA, I think that's what you referred to, came out in 2018 autumn and or end of the year, and then finalized maybe in Q1 2019. And we have some wonderful investors that just nudge us to pay attention to it. And we engaged, you know, our wonderful legal team to look into it and to make sure that we're fully compliant. We're a U.S. entity. We're registered in Delaware. All our GPs are American citizens, and you know, our LPs are all over the world, but there's no government involvement. They're all private individuals or family offices or private institutes. So we feel like we're doing everything we can to try to be compliant with this black box. But you know, long term, I'm hoping that listen, you know, when people talk about CFIUS or FIRMA, even though the F stands for a foreign entity, but it might as well be like one particular foreign country, right? We're talking about the U.S.-China relationship. U.S. and China are the largest two economies in the world. They are also the two economies that benefit the most from globalization. And so it is, you know, to be blunt, stupid, try to destroy globalization, you know, from that standpoint. So you know, but politics is never rational. So that's why we have a rule in our lunchtime, never to talk about politics or religion or, you know, none of these things that cannot be, you know, scientifically talked about. I'm hoping that the world will self-correct. You know, it goes in waves and goes in cycles.
Yeah.
Harry says, despite the hype, AI projects end up failure most of the time. What's your advice for startups in AI? First of all, most of startups end up in failure most of the time, right? So if you look at the statistics, 50% companies don't survive each round of financing, right? So each round, half of them drop dead, right? And so it's not just AI. But AI particularly, you know, I think what I look for is that, first of all, you know, you shouldn't be talking about AI too much in this. You're trying to solve a real problem. Like someone told me, same thing with robotics. If you start to call this, you know, so-and-so XYZ robotics, you're still searching for it, right? But if you figure it out, then you just say, oh, this is just a smarter vacuum cleaner, or this is just a smarter car, or this is just drive by itself. You don't call it a robotic car or something like that. So same thing with AI. You know, I think if you have data, if you have problems that you can solve with better algorithms, then every company should be using AI. But the reason a lot of those projects end up failing is because they're trying to do it for the sake of doing it, instead of trying to, you know, deliver something that's really useful. I definitely have some devices, but it's hard to expand in such a short period of time. But just to be very binary, I prefer whole solutions. I don't like platforms. I prefer that solving real problems rather than claim that they have algorithmic advantages. And you know, you have to understand the problem space really well, and great people. So, all right. So, do we have time for a few more?
Let's do 2 more.
All right.
Yeah.
So I'll be fair. Maybe just Shicheng has 2 questions. I'll pick one. How to identify good people or good team? The reality is that not all companies do a good job. And the second question is that when we build a team, we can only select the employee from few candidates. I mean, actually, we don't have too much choice. Okay, so both are talking about how to build teams with, how to pick with some constraints. I think that's fair. But I think that oftentimes it's worth waiting for the great people. And the cost of not hiring the right people is actually very, very high. It's higher than not hiring people. It's at all. And so that's my advice, and it's worth waiting. And in terms of how to identify good people, spend a lot of time, ask a lot of questions and see their work, right? And if you can afford this, check and overcheck and spend a lot of time with them and with their work. All right, so one more. If you pick the last question.
We got like 25 open questions. Wow, it's hard to read. Okay, I would just pick the next one. So what did you learn from let me do this one. So a book or event that influenced you the most. Can you give any recommendations?
The group or?
A book. Any books that you would like to recommend to our
Oh, that's an interesting topic. I love reading books. Some of the books may not be new, but I still think they're wonderful. A lot of if you're computer science background, then you have to read this book called Algorithms to Live By. So I think it has 12 chapters, talk about 12 classic computer science algorithms and how they can be applied to your everyday life. It's a wonderful read. I love it. What else? Same thing can be said about economic theories. Unfortunately, people are making so much money they don't bother to write a book about 12 economic theories to live by. But there's a podcast, Planet Money, that they interview the top economist about one economic theory that they live by. That's also wonderful, short to listen to.
All right,
in terms of biography, maybe I enjoy Shudok, but there are a lot of wonderful biography. I enjoy Elon Musk's biography also.
Mm-hmm.
So most of biographies, Steve Jobs is a classic. It's a little bit old, but still a good one. So.
Great pick. Thank you, Xuhui. Thank you very much. Thanks for sharing.
Thank you, Yifu.
Yeah,
thank you, everyone.
Some great questions today as well. So regarding our upcoming Thursday, our next episode will be with, let me just share my screen here. So our next episode will be with Fosun RZ Capital, Fuxing Ruizheng. So they're famous because they got a very rich industrial resources. So if you're interested in this episode, definitely stay tuned to our newsletter or event notifications. All right. Thank you very much. Thank you everyone for joining us today. And thanks Xuhui again for joining us to deliver us a great session. And you guys all have a great night. Thank you.
Thank you. Bye-bye.
Bye.